Welcome to the deep dive. Today we're zeroing in on getting business funding, specifically the fast and flexible kind.
Yeah, and we've got a couple of sources here, mainly fast and flexible business funding options, plus a little note.
Both pointing towards Joe Starcher funding. So,
Hmm.
our mission today, let's break down these funding types they mentioned.
And see what might make them attractive, for businesses looking to grow.
Right. Not an endorsement, just exploring what's presented in these materials.
Exactly. A look under the hood.
Okay, so first thing that jumps out from the main document, this promise of, well, speed and simplicity,
Yeah, quick approvals, minimal paperwork. That's definitely appealing.
and funding potentially within 24 hours. That sounds almost too good to be true for some businesses.
Yeah.
What's the big deal about speed here?
Well, think about it. Opportunities pop up fast, or maybe cash flow gets tight unexpectedly.
Right.
Being able to act quickly without waiting weeks for a traditional loan, that can make all the difference. It's about agility.
Makes sense. Okay, let's dive into the specific options they list. First, business line of credit.
Described as flexible access to funds when you need them.
So flexible access. Well, what does that mean practically? Is it like a credit card for the business?
Sort of, yeah. It's like having a pool of capital ready to go. You draw funds as needed, maybe for inventory, maybe cover payroll for a bit.
Right.
And crucially, you typically only pay interest on what you've actually borrowed, so you're not locked into a big loan amount from day one.
Gotcha. That sounds useful for, ongoing stuff or surprises.
Hmm.
What's next? Term loans.
Right. These are presented differently. Fixed payments and clear timelines for, quote, major moves.
Major moves, like buying equipment
Yep.
or expanding.
Exactly. Bigger planned investments, you get a lump sum up front, and you know exactly what you'll pay back each month and for how long. It gives you predictability.
Okay, so less flexibility maybe, but more structure for those big steps.
Precisely. Then we have something quite different. The merchant cash advance, or MCA.
The description is quick capital based on your sales performance. How does that work?
Essentially, a provider gives you cash up front,
Okay.
and you repay it through a percentage of your future card sales, your credit and debit card transactions.
So repayment fluctuates with your sales.
That's the idea. It can be fast, and approval might be easier if you have strong sales, even if other factors aren't perfect. But it's important to look at the total cost.
Right, because the effective interest rate might be higher sometimes.
It can be, yeah. Definitely something to calculate carefully.
Good point. Okay, the last one mentioned is invoice financing.
Helping you turn unpaid invoices into working capital. This tackles a classic business headache.
Oh yeah, waiting to get paid.
Yeah.
So this lets you get cash for those invoices sooner.
That's right. Instead of waiting 30, 60, 90 days for your customer to pay, you can sell that invoice essentially to a financing company and get a large chunk of the value almost immediately.
Wow, okay. That could really help with immediate cash flow needs.
Absolutely. Frees up capital tied up in accounts receivable, lets you, take on the next job or pay your own bills.
So 4 distinct options there. And the material loops back to Joe Starcher funding with a call to action.
Text Hunding to a specific number, 872-228-5250.
And they emphasize no obligation, just smart options. Plus, that extra note we had just reinforces the same source.
Yeah, it makes it seem pretty low friction to just inquire. A quick text isn't a huge commitment for a busy owner.
And thinking about you, the listener, this information really prompts you to consider your own situation. Are you looking to expand, manage cash flow better?
Maybe buy inventory, hire someone new. These tools are presented as ways to address those specific growth points or operational needs.
Right. It makes you think, what's holding my business back right now?
Could one of these, faster, more flexible funding types be the solution?
So wrapping up our look at these materials from Joe Starcher funding, we've seen a few models: lines of credit for flexibility, term loans for big projects, MCAs tied to sales, and invoice financing for cash flow.
All positioned as potentially quick ways to fuel growth.
Which leads to a final thought for you to ponder. Based on these different approaches to getting capital,
What immediate growth opportunity right now could your business unlock if you had that kind of financial support readily available?
something to think about: what becomes possible when those funding hurdles are potentially lowered or removed?